Hey, I'm Alex Gilbert, a reporter at the Defiant. Early this year, in a letter to investors, Grayscale CEO Michael Sonnenshein wrote that the day-to-day debates that animate the crypto industry shouldn't distract us from our longer-term conviction. In his most recent letter to investors, published this morning, Sonnenshein returned to those words, noting, "2022 certainly tested our resolve." That might be an understatement. Just a couple of weeks ago, industry observers were wondering whether Grayscale would be taken down by a sister company's alleged insolvency. I was told by a source around Thanksgiving that that sister company, Genesis, would file for bankruptcy within a couple of days. Now, that hasn't happened, and rumors of Genesis and Grayscale's demise seem to have been overblown. Nevertheless, what happens at those firms and their parent company, Digital Currency Group, is very, very important when one considers the health of the industry. With that in mind, we're going to take a look today at Sonnenschein's latest letter, in which he shares his reflections on the year that passed and details the path forward of Grayscale and its flagship product, the Grayscale Bitcoin Trust. Don't forget to like this video and subscribe to The Defiant for all your DeFi news. Thanks to Opolis for sponsoring this video. More on them later. 2022 tested our resolve, Sonnenshein wrote. How? Well, in June, well into the bear market, the SEC dealt Grayscale an enormous blow. In an 86-page order released on June 29th, the SEC said it was denying Grayscale's application to convert GBTC into an exchange-traded fund because the company had failed to show investors would be protected from fraudulent and manipulative acts and practices. Remember, the Grayscale Bitcoin Trust finally gave institutional investors a way to gain exposure to the original cryptocurrency. Those investors could exchange Bitcoin for shares in the trust and trade those shares in the stock market after a lockup period. But they can't redeem those shares for the underlying Bitcoin, unless, that is, the trust was to be converted into an ETF. For a while that didn't matter, because GBTC was the only game in town when it came to institutional investment in Bitcoin. From 2015 to 2020, shares were consistently worth more than the Bitcoin they represented. On occasion, the premium even topped 130%. But competition eventually emerged and the Grayscale bubble popped. Since March 2021, GBTC has traded at a discount. Right after the SEC's June decision, the GBT discount fell to an all-time low, with shares trading 36% lower than its net asset value. We are deeply disappointed by and vehemently disagree with the SEC's decision to continue to deny spot Bitcoin ETFs from coming to the US market, Sonnenshein wrote. Meanwhile, trouble elsewhere in crypto severely damaged sister company Genesis. It had loaned more than $2 billion to Three Arrows Capital, the crypto hedge fund that blew up in June. It also had some $200 million custodied on FTX, money we'll likely never see again. But GBTC, not Genesis, is the crown jewel of Digital Currency Group. Grayscale has appealed the SEC's decision to deny the ETF conversion. Should it fail, Sonnenshein has a plan. More on that in a moment, but first, a word from our sponsor. Life as a Web3 indie worker is tough, tracking multiple income sources, looking for healthcare, withholding taxes, all waste time. Opolis is a digital employment co-op made for indie workers by indie workers. Opolis provides pay stubs and annual W-2s for proof of employment and offers affordable group healthcare benefits. Also, Opolis members earn work tokens and share in profits by utilizing member services like running payroll and referring friends. Intrigued? Learn more at opolis.co. Back to our story. In his letter to investors, Sonnenshein wanted to make clear that Grayscale is insulated from what happens at Genesis and Digital Currency Group. Neither company is a counterparty or service provider for GBTC or any of our other products, Sonnenshein wrote. Grayscale and our products, including GBTC, are separate and distinct legal entities, meaning the assets underlying GBTC, the Bitcoin, are owned by GBTC and GBTC shareholders alone. Now, DCG, Genesis, and other affiliated companies are shareholders in GBTC, but collectively own only 10% of GBTC shares, according to Sonnenshein. And regulators limit the amount that they can sell within any 3-month period. The company's goal, its North Star, is the trust to ETF conversion. This is and has always been the business priority for the Grayscale team, Sonnenshein wrote. I noted a moment ago that the company has appealed the SEC's decision. Grayscale filed its opening brief in October and received, quote, a formidable amicus brief support from a diverse pool of traditional finance and cryptocurrency experts, including academics, former regulators, trade associations, think tanks, and market participants. This month, the SEC submitted a reply brief. Grayscale's reply to the SEC's reply is due January 13th, 2023. Final written briefs are due at the beginning of February. Shortly thereafter, according to Sonnenshein, a 3-judge panel will hear oral arguments and rule on the case. Grayscale could win, or it could lose. The judges could deny the trust to ETF conversion, dashing the hopes of GBTC's many investors. Remember, if the conversion is approved, investors will be able to redeem shares for the underlying Bitcoin, which would, in theory, remove the discount the shares are trading at. If Grayscale loses in court and concludes there is, quote, no possibility of legislative or regulatory clarity that would allow for the conversion of GBTC to an ETF within a reasonable time frame, Sonnenshein has a plan B, a tender offer for a portion, probably 20%, of the outstanding shares of GBTC. But that too would require government approval from the very agency Grayscale is fighting in court. A tender offer would require relief from the SEC to ensure that it's fair to all investors. Separately, it would need to be approved by GBTC shareholders. If Grayscale clears both hurdles, it would continue pursuing the ETF conversion, although we may consider doing additional tender offers thereafter, subject to obtaining SEC relief, Sonnenshein wrote. And if plans A and B fail, we do not currently intend to dissolve GBTC, he wrote, but would instead continue to operate GBTC without an ongoing redemption program until we're successful in converting it to a spot Bitcoin ETF.